Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Tuesday, April 7th, 2020. We again find ourselves in the final hour of the trading day. In my opinion, the best time to make your buying and selling decisions is in the last hour of the day, and particularly in the last few minutes. And I say this because during the daytime, you have the algorithms, you have the day traders. They are battling it out, fighting it out, moving the price around. At the end of the day, in that last hour, you have the large financial institutions come in. They come in with size. They're dealing with the most money. They have the smartest people. They have the best technology, the best research. And they start to move the prices away from the control of the day traders and the algorithms with their size. And so, in my opinion, I think it is the best time and the most valid prices to kind of piggyback on the large financial institutions and do what they're doing. Of course, it doesn't work all the time, but in our business, we have a game of probabilities. And I think more times than not, following the large financial institutions is the best way to go. And so that is why I primarily make the majority of my buying and selling decisions right in the last few minutes of the day. Have had day trade today, which turned out pretty good. I will show you that. So I do intraday trade occasionally, and I'll definitely show you that when we go through the list and take a look at the positions. So anyway, thank you all so much for coming. I always look forward to seeing everybody. I appreciate you spending your time with me here. I hope it's helping. I hope that by investing your time here that you are getting a return on your time investment by helping with, with this channel, helping you with your trading and investing. So thank you so much. I really do look forward to seeing everyone every day. Hey, Quad Racer is here. Hey, Quad Racer. Good to see you. Happy Tuesday, everyone. Happy Tuesday to you, Quad Racer. Appreciate you coming by. Hey, Marco. How are you, my friend? Good to see you. Hope you're having a nice evening in Slovenia, all the way over there in Europe. So thanks for coming. Always good to see you, bud. Kamal, hey, buddy, what's going on? Good to see Kamal. Kamal and I chat during the day on Skype and exchange some ideas. So that's kind of a cool thing. Thanks, Kamal. Frank, hey, buddy, how you doing? Hello in group. Glad to have Frank here as always. Hope you're having a good day, Frank, and hope you're having a good day here in the market. So I have just been sitting back here watching the market a lot of the day today, just looking at short-term charts go by, looking at patterns, so forth and so on. I did take one day trade today. I will definitely show you that. Also just been sitting and listening to ELO on YouTube. Man, I forgot what a good band ELO was. Jeff Lynne, man, what a musician that guy is. Holy smokes. Anyway, that kind of dates me, I guess, but maybe some of you out there are around my same age, and it was kind of fun. So if you have some extra time on your hand, watch some YouTube videos, watch some ELO videos. They're pretty dang good. Hey, Bob, good to see you. Nice having you here, sir. Hello, team. Good. Bob is part of our team, and hope you're having a good day. All right, so listen, here's the plan. As always, we're going to run the U.S. legal disclaimer. Secondly, we're going to come back. We're going to take a look at my current positions, talk about when I bought them, why I bought them, what methodology, what the strategy was, what my thinking was when I bought them, and then how I'm going to manage them going forward. After that, some of you were kind enough to share your trades with me here, and they're up on the board. So we'll go through there, take a look, and see how they are doing. After that, we're going to spend a few minutes on trader psychology. I mention this every day, but listen, it is important. It's important to learn how to trade. It's important to learn the mechanics of it. It's important to learn the support and resistance and technical levels and indicators, all that. But mainly you do that so that you have a structure to your trade and so you can put together a trading plan. But once you have a trading plan, following it is a whole other thing, right? I can say, hey, I'm going on a diet. I'm just going to eat boiled eggs and celery, and that's my plan. Well, it probably would work. But in reality, it's harder to do. And in trading, it's hard to follow your plan. It really is. And usually where people get jammed up is they position size too large, their position is too large, and it amplifies up their emotions. So take it from me, one of the best ways to keep yourself in check and able to follow your trade plan is just finding that sweet spot of position size where you care and makes a difference enough, but it's not such high emotions, both to the upside and the downside, that that it will make you break your plan and not follow it. So try to find that sweet spot. That's really the key. And I think you'll see a dramatic improvement in your trading if you just find that right, correct dollar amount. So like I said, so on the upside, it makes sense and it's worth it. But to the downside, you're not going to get shaken out because you feel like you're losing too money. You just boom, want to hit that sell button, or sell button to the downside or sell button to the upside if things get too amplified with your emotions. So try to find that amount. Then after that, we are going to go down through my watch list. I have 3 requirements whenever I look to enter a new position. Pretty simple, but I use them every single time I look at entering a new position. But number 1, I look for a confluence or a combination of indicators lining up, and the more the better, because I consider indicators such as MACD and RSI, moving averages, I look at them as potential groups of buyers. And so if I can see a combination of different groups of buyers coming in together, it puts me in a better position to have a profitable trade, because your chances go up dramatically to have a profitable trade if you are in with as many other groups as possible. So first, I look for a combination, confluence of indicators. Step 2, I make sure I have a good risk to reward. Even though I do have a good confluence of indicators, I have to make sure that, depending on my overbought, oversold levels, a major resistance above me compared to what the support is below me, that I can make at least two times to the upside compared to what I'm risking to the downside. So it's a very important part of the equation. And the last part of the equation, do not have too many correlated positions. Do not go in and buy 3 tech stocks on the same day. Do not go in and buy 3 auto companies on the same day. You're just tripling and compounding your potential risk. And remember, our number 1 priority in this business is risk. If we respect risk and we do everything we can to avoid that risk and keep our losses small, then the profits will take care of themselves. So make sure you have uncorrelated positions as much as possible. And then also, account heat is very, very important. If you have $100,000 and you say, hey, I'm going to put $10,000 in 10 positions because they're totally uncorrelated, I personally would not do that. The maximum I will ever put at risk, even with completely uncorrelated positions, is 60%. And that's at a max. That doesn't mean I have to have 6. That's just the maximum. So anyway, those are the criteria. You're going to go down through the list. If something matches my criteria or matches my requirements and looks good, I'll mark it as a candidate. As we get closer to the end of the day, I'll go down through those candidates and basically try to find an excuse not to buy them. I want to whittle them down to just the best potential trade of the day if possible, looking at all the indicators, all the readings, different time frames, Fibonacci points as well, and if possible, just find the best possible trade at the end of the day, if I even have one, right? If I don't have one, that's fine too. Then after the market closes, if anybody has any questions for me, I'm happy to answer. If you have any comments, questions, if you'd like me to take a look at any stock symbols, I'm happy to do that. I'm happy to give you my humble opinion. If there are any stock symbols that you would like me to look at before the market closes, if it would be helpful to you and you think it would be helpful to the group for me to give you my opinion and break down that symbol, please put the symbol in. Please put a star by it so that I know it's time sensitive, and I'll do my very, very best to get to it before the market closes. All right, so that's the plan for today. If you could be so kind, hold tight for about 40 seconds, and I will be back after the disclaimer. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, so let me comment here. We were up about 900 points at the open, And we've sold off ever since then. The Dow is still up 315 points, up 1.4%. NASDAQ is up 51 points, up about 0.65, and the S&P is up 30, just slightly over 30 points, up 1.15%. So anyway, good day here, all in all, off the highs, but still good day. Grateful definitely for that. Okay. Mount Doji is here. Thanks, Mount Doji, for coming. Good to see you, my friend. Dan says, hi. Strange enough, uncooked eggs last longer than boiled eggs. I did not know that, Dan. Interesting. Huh. How about that? Frank says, poem. Okay, here we go. Pandemic. A word we wished had... Oh, pandemic. A word we wished we had never heard. Markets react and must learn to endure the volatility rages, and workers see wages. Know this will end for this one trend that is not our friend. Okay, I butchered that. Let me try it again. Pandemic. A word we wished we had never heard. Markets react and must learn to endure as volatility rages and workers seek wages. Know this will end for this one trend that is not our friend. Thank you, Frank. Sorry, I didn't do a very good job with that, but if I had a few minutes to go over these before, I think I could get the pattern and the rhythm down. But sometimes when you come at them cold, it's sometimes tough for me. So I apologize that you put all that work into that great poem and then I don't do a very good job with it. But thank you so much, Frank. Always appreciate that. I was speaking with one of my students last night, and we were discussing how great it is that you and Joe are able to make those poems. So I really appreciate the time and effort you put into that. Hey, Zach, good to see you. Nice to have you here. Good to have you. Steve, hey, LOL, Frank, for this is one trend that is not our friend. Man, how you doing, Steve? Good to see you, my friend. Appreciate you being here. Always an honor and a privilege to have Steve in the chat. I mean, I really mean it. I say it every day, but it's from the heart. To have somebody with Steve's pedigree and all the great books he has and all the great services he offers, to be able to rub shoulders with him in the stream every day is pretty dang cool for me, and I'm sure everyone else feels the same way. So thanks, Steve. Appreciate it. Hey, Gamer, good to see you, bud. Always nice to have Gamer here from Colorado. Glenn, hey, Glenn, good to see you. Hi, Greg. Raising more cash with move above 200 SMA weekly 2640 and looking for market to max out at failing at 2870. 50% retrace of move at 23 or 2793 is a level to watch. Yes, I like 50% retracements. Good to know. Yeah, well, we've sold off here, so it looks like we're running out of some buyers, at least today. Of course, we don't know what's going to happen. Frank says, that's for sure, Steve. Frank says, missed the period after wages. Sorry. Is that what threw me up? Oh, man, threw me off. Okay, well, let's get started. Boy, this has been a wild day so far. Wild day. All right. Apple. I did buy Apple back here on the 2nd of April. I bought it here at 244.90. We had this nice higher low V1. A higher low means we make a lower low. We rally into the value zone. We come down a day or so. Then we have a false breakout to the downside in reverse. In other words, a V1 where we have day one, day two washes out day one, closes above day one's close. Also rejected the -1 ATR channel, which I like. Moved sideways. Boom. Yesterday we had a big day up, hit a couple profit targets. Today hit a profit target right at the top, which I'm really, really thankful for. Now, original trade plan on this was to hold this unless we had a close below the previous day's low or we rejected the 50 RSI. Earlier in the day, we were under 50 RSI. Now we're holding above it, but we're still down in the value zone. I don't like this price action where we open high and reverse, right? The close currently is still above yesterday's close, but far below the open, meaning that just no one wanted to buy after the open here. So being that we've had this big reversal bar, being that we're back in the value zone, I'm kind of I'm kind of leaning towards just taking this trade off. This was a great trade. So far, about 7% from entry to where it is now. Really glad I hit that profit target there. So let's look at the weekly. You know, the weekly rejected the 50 RSI, which I don't like. You know, I like to look at things in a couple time frames. So I don't like the action on the daily. I don't like the action that we rejected the 50 RSI so far on the weekly. So more than likely, the only thing that would possibly save this trade is if we close back above the 1 ATR channel and closer to the open. But as of right now, this has been a great trade. Very thankful for this. And I think at this point, I'm probably going to take it off. But I reserve the right to change my mind at the end of the day if something bullish happens. Gold. Okay. Gold. I did buy gold back here on the 26th of March. I bought it when we had a 520 crossover. It's a good back tested trading approach to gold. Doesn't always win, but generally if it gives you the potential of having really big wins, but giving you a structure to get out quickly if you're wrong. So my exit plan on this particular trade to the downside was a 50-50, meaning that if after the crossover, the price crossed under both the 5 and the 20, which were the two moving averages that I used to enter the trade, if they closed below, I was not going to get out of the entire position. I got out of half the position, locked in half that loss, but the 5 was still over the 20. So it's technically, from a mechanical standpoint, the crossover was still in place. It did move up, took some profit targets, took a couple yesterday. Currently, I mean, obviously, I'm glad I held this second half. I mean, for now, anyway, right? But at least hit some profit targets on the way back up. So if it does come down, I've mitigated some of that risk. But as of right now, my exit plan on this is if we reject the 70-hour side to the upside, if we have a big, huge reversal bar like we did on Apple, or if the 5 crosses back under the 20-day EMA. So that's gold. Goldman Sachs. Okay, so I did buy Goldman Sachs back here on the 2nd of April. Similar to Apple, same kind of setup. We had a move down. We had a rally into the value zone. We had some sell-off. Then we had a new group of buyers come in here. We had a nice V1. Here's day 1, day 2. Day 2 washes out day 1, closes above day 1's close, rejects the -1 ATR channel, took out the high of this gap down day, bullish engulfing bar, and this has moved up nicely. Hit one profit target here. It did reject the 50 RSI today, and so far it looks like it's rejected the 1 ATR channel. So this one, unless it closes above its open, unless it closes above the 50 RSI, this one's definitely coming off the table. But this trade so far has been almost 10% from entry to, let me see, is that right? Yeah, 9.97%. So anyway, really good trade. Grateful for that. I did only take a quarter position here because it was under the 200-day, and I had to adjust for volatility because the volatility had expanded, but still nonetheless very, very happy to have that trade. And it looks like it's going to come off. SPY trade. Well, SPY's been looking up so far. I do apologize. I do mention this each day, but in case we have some new viewers, I want them to understand. But I do buy the SPY every single day at the close. I hold it overnight. I sell it first thing the next morning. It's not based on technicals, anything like that, support resistance. It has just everything to do with back-tested numbers. This is from Liz Ann Saunders at Bespoke Invest. The two approaches here that they tested from 1993, approach number 1 was buy the SPY at the open, hold it through the day, sell it at the close. If you did this every day since 1993, you'd have returned a negative 13.9% for all your troubles. However, if you do the opposite, which is what I've done it since February 26th of 2019. And it has worked out so far. This year has been horrible. But using this approach, buying the SPY like I do at the close, holding it overnight, selling it first thing the next morning, returned a 634.2% return. So much, much better than the negative 13.9 doing the opposite way. just because it's worked in the past does not mean it's going to work in the future. But if I'm going to allocate capital towards something, I want to allocate it towards something that has good back-tested results. So you can see blue lines, buy in the afternoon, hold overnight, sell in the morning. Orange lines, buy in the morning, hold through the day, sell in the afternoon. Obviously, the blue line has a much better equity curve than the orange line. You can see, though, there, even though long-term it has worked out well, it does have periods of drawdowns, and 2020 has definitely been that kind of year. Definitely, I'm down on this particular year so far, but I do believe in this approach. I like to vary up my trading approaches, and so this one fits well with me and my personality of having a short-term overnight trade. But again, there are drawdowns, so it's very important, at least in my opinion, to position size very conservatively so that you can withstand these drawdowns and do this for the long term and let that edge play out. Okay, that being said, I did buy SPY yesterday here at 264.86 and almost sold the top, 274.30. So almost got 10 points out of that. I got 10 points yesterday and 10 points today on this approach. So I'm very grateful for that. With that being said, of course, I will buy this again at the end of the day, hold it overnight, and I'll sell it first thing the next morning. Okay, United Airlines, how rude is this? I bought this yesterday. Excuse me. I bought this yesterday at $23.97. Had this nice under 30, over 30, and this nice little higher low V2. Here's day one, day two, day three. Day two washes out day one, day three closed above day one. Bought it here, $23.97. Hit a profit target up here today at $28.15. 17% higher. I mean, we must be in la la land when we have 17-point days up and down. I mean, seriously. So anyway, I'm very grateful. This is a great example of why I like to phase out. I don't care if it wasn't the whole position, but I was able to lock in about, 10, 12% of my shares here at a nice profitable level. Right now, I'm back to about even. So what am I going to do with this trade? Am I going to hold it and wait for a close below halfway or a close below the 30? I don't think so. I don't like this reversal bar. It gapped way up, reversed way down. It's working on a V1 to the downside. This is very bearish. Look at the volume. It doesn't mean it can't go up tomorrow, but I'm going to take my profits on this mainly because of the big gap up and get out. But I was so excited to have an 18% upper, but it gave it all away. But again, that's why very grateful that I took some profit here, 18% higher. So all in all, this looks like it's going to turn out to be a fairly good profitable trade, even with this reversal, but I don't like the reversal. So I am going to get out. Okay. Oh, I forgot to show you. I did have one day trade today on Apple, was on the 5-minute bar. Where was it? Back here. Here we go. Not a big one, but over $1, and I will take it. This is the 5-minute chart. We closed below the 1 ATR channel. We rallied back into the value zone. We had a day down, and then we had this beautiful higher low V1. Here's day one. Here's day two. Day two washes out day one, closes above day one's close. Reject the -1 ATR channel. Also reject the 20 and the 5 and the 10. I don't have it right away, but you can see I bought it right here at the close, about 265.11. Moved up nicely. I did get out here 5, 10, 15 minutes later when we had this reversal to the downside. We had this V1 to the downside and a rejection of the 1 ATR to the upside right here at about 266.30. So yeah, it was about $1.15 profit on Apple in about 15 minutes. So anyway, good day trade, but I do like to, when I have good intraday setups, the patterns that I use work on any time frame. So that's why I did take this, and it was a bullish engulfing bar. So bullish engulfing bar, higher low V1. And so that worked out pretty well. All right, let's take a look over here. We have a trade with Kamal. Kamal did buy Cisco. He's basing this on the weekly time frame. I don't have an exact price that he got in, but he got in on the weekly with the rejection of the 200 and close above, which is good because if this coming week closes below the 100 because he's 200, he's so close to it that theoretically, he could have a very small loss with potentially a very big gain. He's definitely up on the trade. It was up much higher earlier today, but he is still up on it. Let's see, 39.40. So I guess maybe about $1 or so. But anyway, nice job, Kamal, and I'm sure Kamal's going to stick with his plan there. We have Bing He. Bing He bought Clorox back here, 175.05, back on the 27th of March, sorry. Kind of moved sideways, it's moved up, but he's definitely up on the trade so far. So congratulations, Bing He. RWM, Bing He also did buy ProShares, which is short. So initially it went up nicely his way. It was down yesterday, down a lot more today. It's reversed back up here. Looks like it's possibly forming a V1. So I don't know if you still have that, Bing He, but it has definitely erased a lot of the losses. So I'm happy to see that. And yeah, that's it. That's it. Okay. Frank says, I did a day trade in VIPS, bought at 1609, sold at 1663 for a nice little gain. Oh, fantastic. Let's take a little quick look-see. VIP Shop. Interesting. So you bought at 1609 and you got out at 1663. So you got out near the high. So very nice, Frank. Appreciate it. Appreciate you sharing that with me. Bing He says, hi, Greg. Thanks for UAL trade. Took profit on market open. Nice. I'm glad somebody did. Well, I guess we kind of both did, right? Because I did hit my profit target at the open, but Bing He took the whole. So fantastic. So glad to hear that, Bing He. You needed one of those. Steve says, great trade in Goldman Sachs, Greg. Thanks, Steve. Appreciate it. Looks like that one's coming off the table today, though. Bing He says, I was hesitating to take full profit on market open or wait till market close to take profit on for UAL. Somehow, I don't know why, I just felt market would turn bearish. Is this luck? Well, I mean, maybe, partially, but there's some experience that gets in there as well. But, I looked at this and I thought to myself, oh, Greg, you're not happy with the 18% return, right? It really wasn't that. It's just that I wanted to follow my plan. But, after thinking back about it, I'm like, why didn't you just take the whole thing? Well, I know why, because I wanted to follow my plan. But anyway, nice going, Bing He. 18%. Woo woo. Nice. Perfect. Okay. So listen, before we go down through my watch list, before I look at some candidates for a potential end of day trade, before I whittle those down to hopefully the best setup of the day, I do want to spend a few minutes, talk about trader psychology, talk about some trading tips and good trading words of wisdom. And there's a lot of great Twitter channels out there. There's a lot of great Facebook channels out there that are nice enough to spend the time to give us posts that we can think about and learn from. And there's so many great people out there, but Mark Minervini is very famous. He's a market wizard. He has great books. I'm sure you've heard of him, but I do enjoy reading all of Mark's posts. And I read this one here today. And it kind of spoke to me, and I thought it would be helpful for the group. So let's take a look and see what Mark has to say. He has two posts. I'll start with this one. It's easy to get lured into the market on big up days and place undisciplined FOMO, fear of missing out, trades. But keep in mind, the biggest rally days occur during bear markets. Sustainable markets have very few more than up 3% days. Bear markets are dominated by them, but at the expense of volatility, right? It's true. Bear markets have huge rallies. Bull markets, having 5%, 6%, 8%, 9% rallies like we've had, those don't happen in bull markets. They happen in bear markets. So when you see huge up days, you're probably just coming off oversold levels in a bear market and rallying, right? So the point there is, of course, when it's going up, like yesterday, I was up 1,600 points or whatever. You're like, oh my gosh, things must have changed. Somebody must know something. We are going up, right? Well, yeah, we've been through this rodeo before over the last month, haven't we? We've had up 3,000 days. We've had down 2,000 days. We've had up 2,000 days, right? So I'm not necessarily buying it, right? So the point Mark is making here is don't force trades. This is one of my main rules. Mark says don't force trades. With the Dow rocketing higher, you may feel pressured to get involved, but I never let the market pressure me outside my buy criteria for individual stocks. Don't chase, let the trades come to you. And I mentioned this many times in the past. I studied with Dr. Alexander Elder. And Dr. Elder told me about a student that he had, one of his best traders, lived in New York City. She lived in an apartment building. She would look at a chart way in the future and say, okay, if we get this or that, maybe a double bottom with a bullish divergence with the under 30, over 30, RSI divergence, MACD divergence, ATR divergence, false breakout to the downside of V1, all the stuff we talk about, she would print it out. It hadn't happened yet. It may not happen for 2 or 3 weeks, but she would print out and say, if this happens, that's my trade. She'd print it out. She'd tape it to her wall, and all in her apartment, she had, many, many different setups that not even close to happening yet. But the point was, she was like, if this happens, that's my point. Just like Warren Buffett says, there's no 3 strikes rule in the stock market. In baseball, you just can't sit there and wait for the perfect pitch because you'll just get called 3 strikes and you're out. But there's no 3 strikes rule in the market. You can sit and wait and sit for that perfect pitch to come across the plate or that perfect trade to come across the plate. So Mark is 100% right. Don't force trades. Don't get caught up in the emotions of, oh, the market's going to go out and I'm going to miss out on something. Just let it come to you. Only take the trade if it meets your criteria. So anyway, that's Mark Minervini at Mark Minervini on Twitter. I would really suggest you follow him on Twitter. He has great books. Read them. But thank you, Mr. Minervini. Appreciate that. This is really good advice. Okay. Frank says, LOL being he, don't stay in water too long. That's right. Steve says those rallies is what makes the short side so difficult, and so much money is lost with false signals during bull markets that being stopped out of huge rallies even during bear markets usually is a net loss. It's very hard. I've had people say, isn't it just easy to trade to the downside? It is so not easy to trade to the downside because you have the volatility, you have the movements, you get scared. Oh, the market's going up. I got to get out, right? So Steve is 100% correct. 100%. Dr. Jorgensen's the same with the ladies. Don't chase them. Let them come to you. Well, there you go. Dr. Jorgensen knows what he's talking about there. That's right. Don't chase anything. Let it come to you. Bing He says, I might be right about GSX trade late by 1 day, but I cannot short as my broker do not allow short for this ticker. Well, I'm kind of glad to hear that, actually. I get concerned when people short, honestly. I mean, not that people can't do it, but it's a tough one. It's a tough one. I'll tell you what. I was looking at taking a short in the Qs today, and I did not take it. Darn it. Look at this. I even had the line marked up here. Look at this. Over 70, under 70. Bearish engulfing bar. V1 to the downside, right? What else do you want? Huge volume. Well, that was the top, right? And I even said to myself, all right, oops. On this particular trade, my trade plan is going to be, if it closes above halfway of my entry bar for a small loss if I'm wrong, or if it rejects the 50-day moving average, or the 50-bar moving average in this case, 5-minute. Look at this. What a beautiful trade this was going to be. Never closed above the 50, never closed above the 50, and that is where I would have gotten out like $2.50 lower after I had this under 30, over 30 reverse back up with the V1. But I didn't take it, and that's how it goes. But anyway, it was good practice anyway. That bar really did stick out to me with that volume and the bearish engulfing and the V1 and the rejection of the 70 and the third ATR channel. So, okay, where am I at? Okay, we've got time. Bruce says, or men as the case may be. All right, so I'm going to crank down through these. I have gone through and noted a couple of them. I'm going to have to make a decision at the end of the day. Apple, of course, like I said, I have Apple here from 244. It's been a great trade. I just don't like the action today. I don't like the bearish reversal bar. I don't like the V1. The only thing it's holding it is the 50 RSI, and it is not anymore. So very likely Apple is coming off the board. Adobe, V1 to the downside, is holding the 100, 200 day, but not enough there. Amazon up today. Amazon it's getting close to a valid crossover, which is the 550 SMA crossover. Even if this crosses tomorrow, I don't think I'll be allowed to take it. My filters don't allow me to take it above the second ATR channel, so I don't think I'm gonna take that one. Boeing, big V1 to the downside, very bearish bar. Berkshire, same thing. You know, a lot of things are going to be like this. Yeah, same with Beyond Meat. Caterpillar strong, man, strong like bull. But you see it pegged that third ATR channel. 92% of prices fail right about here. You also have the confluence with the 200 day above, so definitely not going to buy this. But Caterpillar has been strong. Carnival still up 10.28%. We had that beautiful double bottom with a beautiful bullish divergence with missing right shoulder. I was gonna buy it here. Unfortunately, I had the setup, but I didn't get my trigger. My trigger was a close over 30. It closed like a half a point under. Unfortunately, it just went zooming up. So at this point, I'll be looking for a higher low V1 or V2. Dow, again, bearish bar, just closing below the open. Disney up a little bit today. Don't see anything on Disney. Etsy, same pattern, rejected the 50-day moving average. Facebook holding the 50, but again, looks like the close is going to be under the open. Gold, it has paired some of its losses here so far. Google, same situation, just holding that 50. You see how a lot of these big techs are just holding that 50. It is acting as support, but vis-a-vis the reversal with the close being below the open here, and if it rejects the 50, that would be a lot of confluence of a V1, all sort of nasty stuff. So Goldman Sachs, definitely going to get out of Goldman Sachs unless it closes back over the 50. Home Depot, same pattern, big reversal day. What is the market doing? Oh, it's only up 100 points now. Okay. IBB is interesting here, although I'm a little torn on this, to be honest with you. Looks like we do have the 530 EMA. This is a valid crossover system. Doesn't work every time, but it gives you a good structure. Earlier in the day when I was up here, I was like, there's no way I'm buying that up at the second ATR channel. But now it becomes more tempting. It's holding support at the 200-day moving average. But Miko 25, if you're out there, we had a lesson last night, and this is what I was explaining. What I don't like, how I like to analyze charts in 2 time frames. Well, on the weekly, do you see how we've already tested the 50 RSI and we've already tested the 50-day moving average on the weekly, and it's rejected it? So that makes me a little hesitant to take this trade. And now look, if you're just buying this completely mechanically, sure, yeah, you go ahead and buy it. I mean, it makes it easy. But if you have filters like I do, then you have to be a little more selective. So we have this reversal bar to the downside. We have a V1 to the downside. Nobody wanted to buy back up here. Doesn't mean in the future we can't go back up there, but in combination with the weekly having rejected the 50 RSI now and also rejecting the 50-day moving average, I think I'm going to pass. And if it closes below the 200, I would definitely pass. So I'll keep it on there. But most likely I am going to pass on that. Probably what I will do, however, is if we can come back down here closer to the 5, the 5 and the 30, and it will hold, and the 5 is still over the 30, and I have support here from this previous high, then I think it would give me a better risk reward ratio. So kind of to be determined. Intel, well, same kind of situation, way too high for me to buy. Russell, still up today slightly, but rejecting the 1 ATR channel, rejecting the 20-day. J&J, don't see anything there. CarMax up nicely today, but I would need a higher low V1 or V2. Coca-Cola, reverse. Lockheed Martin, big reversal, double reversal of the 50 and the 200. Looks like we have a death cross today. That's when the 50 SMA crosses under the 200 SMA, but I don't like the big reversal bar. Master Card, look at that, just peg the 200, right? I was talking with Miko25 last night about this 200 is definitely going to, most likely, of course I don't know for sure, but it did work out where that really was a major point of resistance above, like almost to the penny. Mickey D's, no. Merck, no. Microsoft, holding the 50 at least, but it's too high for me to buy up there. Netflix, don't see anything. Nike rejected the 50-day moving average. Philip Morris, down a little bit. I don't see anything there. Looks like we do have a death cross going on there as well. PayPal, reversal. Qs. Okay, so here we go. Qs. We do have a 520 crossover. That's a valid crossover. 520 EMA is a valid crossover. However, we got close to the second ATR, which not the end of the world, but we have rejected the 200-day. And again, on the weekly, if we look at the Fibonacci from the high to the low, see how we literally got right back up to the 50 and failed? The 50% Fibonacci number, the 50% fib point as well, we rejected the 50 RSI. So I look at that as double confirmation of rejection to the upside. So I think I'm going to pass. We had this big bar up. This bar likely would hold some support here. If we can come back down to here, then I'll enter the trade with the 520 crossover, giving myself a better risk to reward. But who knows whether that's going to be the correct move or not. But based upon the weekly, based upon the 50 RSI, and based upon the rejection of the 50-day moving average on the weekly, it's concerning. Silver looks like it is having a crossover. I just feel like it's a little too high here. We rejected the second ATR channel, so I'm just going to be conservative. I've had really good the last few days of trading, and I don't want to force a trade. And my gut is telling me, and when I say gut, I mean from experience, some of these indicators where they are, I don't like them. S&P, of course, I will buy that today. Teladoc, well, back down into the value zone, which is good. If we could just get this thing to go sideways, then we could look for a little dip by here with the V1 or V2 to trigger us in. Boy, bonds were down a lot more earlier. They were down $4 when I saw them. Tesla, one of the stronger ones today. Anyway, I don't see a trade here, but one of the stronger ones. Oh, Twitter's up pretty nicely too, but it looks like it may have rejected the 50 RSI and the 20 UAL. Okay, I am going to get rid of this. I just don't like the reversal bar, losing 8% to the downside, the volume, so forth. So I'm gonna go ahead and lock that one in. The rest of that one, UNG. Whoa, look at natural gas today. Holy smokes! Again, look for a pullback into the value. UNH, big rejection of the 50 and the 200. Boom, boom. Oil, had that really good trade on oil. I bought those calls and I sold half on this big day, sold half on this big day. We are getting pretty close to 50% retracement from the low here up to the high. And as a matter of fact, we are right there, which doesn't mean, okay, I'm going to go ahead and buy this, but you know, I'm glad to see that it is forming some support here at that 50% move. What I'd like to do now is I'd like to see it a V1 or a V2 or move sideways in a V1 or V2. And that's where I would enter back in. You know, on the upside, we had the big volume on the up, little less volume on the way up. As we've gone down and down, less volume, although today's a little bit more volume. So anyway, this one's not quite set up. VIX probably, yeah, VIX has gone green with the V1 to the upside. Not a great washout. Verizon's strong, but too high. Walgreens, I don't see anything there. Walmart, been strong. Need to pull back into the value zone, get some sideways movement, and then that could be possible. Energy, very strong. Look at the rally off the low of energy. What a move. Financials, gapped up, reversed back down. Real estate, same pattern. Utilities, same pattern. Healthcare, rejection of the 50 and the 200. Boy, got pegged right there. And Zoom's always an interesting one. Woo, down again even more. So the potentials for today, Amazon has not triggered. IBB, again, it rejected the 50% fib mark. It rejected the 50-day moving average. We are quite high up here. I think I'm going to let that one go. And the Qs. You know, I'd like the Qs better if it would close above the 200. But again, on the weekly, we got stuck at the 50 RSI. We rejected the 50% Fibonacci. And on the daily, you know, we rejected the 200 here, and it's almost to where I can't take it. So looks like I'm probably going to pass on everything except for my overnight SPY trade. But let me just quickly look. Apple. Yeah, I'm going to take that off. Gold's rallying back up. Oh, Goldman Sachs. I may be able to keep Goldman Sachs if it closes over the 50. And UAL. Yeah, I'm going to take that. I don't like the big reversal bar with the volume and the rejection of the 10-day. Now, Toji says, has SLV made that bullish cross that you said backtest well? Yeah, it has. 1371 to 1368. So it is doing the 520 crossover, which does backtest pretty well for SLV or AGQ. But I don't like it. It's just a little too high for me, Mount Doji, here at the second ATR channel. I just feel like the risk to reward is limited. Doesn't mean it has to be, but here's the third ATR channel right up here. So, you know, if percentage-wise we get stuck up here, then the risk to reward maybe is a little better than 1-to-1. So anyway, that's my take. But yes, mechanically it has crossed. Okay. So, okay, I have about 10 minutes, so that's good. I have to trade a couple accounts here, so I do have to make some decisions here on Apple. Goldman Sachs right on the button of 50. It's going to make it hard on me. Oh, at least UAL is coming back. I don't like that it's below the -1 ATR channel. That's just another level of resistance above me now. You know what I forgot? I always keep forgetting this, but before I look through the trades for possible trades, I look at this to remind myself and remind everyone else out there. Choose Wisely Today by Diana Cooper. Choose wisely today, meaning do you have good risk to reward ratios? Do you have good clean setups? Do you have multiple indicators lining up? Or in other words, different groups of buyers lining up? How is your correlation? How is your count heat? Choose wisely, choose wisely, choose wisely today. When I had my lesson last night with Miko 25, my student, we were talking about how many trades should you take a day and so forth. And I said, I think probably one of the best policies anyone in the world could have would be one trade a day, one good trade a day. Get your candidates, look through them, but go through them with a fine-tooth comb and try to get rid of as many as possible, right? And just take the one that has the best setup, has the cleanest charts, has the best support and most well-defined resistance levels above and support below, not on just one time frame, but on multiple time frames. But in other words, choose wisely today. So that's a reminder to me and everyone else out there. Steve says, excuse me, the AGQ 520 backtest much better. Let's look at AGQ. Thanks, Steve. So AGQ is double leveraged Mount Doji. That's double leveraged silver. Doesn't look like the crossover has happened yet, though, on AGQ. Was a little quicker on SLV. Because this one has. This one has. Let's look at the weekly. Yeah, it's right about that 50% retracement. I mean, to the penny. Literally to the penny almost it got there today. So that's what concerns me. It may, turn out by me not taking these trades and I'm going to miss out on a lot of profit, but that's okay. I've had a really, really good couple days. I'm very grateful for it. And just like, I read Mark Minervini's post that I don't want to force it. And it's not like I'm forcing it in the sense that they're not valid trades, but they are valid trades. But for me, there are some red flags on the weekly here. The rejection of the 50 RSI, the rejection of the 50 Fibonacci Fibonacci point. And on IBB, this big bearish bar, losing the 200-day, and the same thing, rejecting the 50 RSI, rejecting the 50-day moving average, and the 50 fib point. So I think I'm just going to play it a little safe here, not take them. Again, the crossovers happen. I could wait for a pullback, try to get a little bit better entry position. If I do, great. If not, and it takes off without me, then that's how it goes, right? Trades will come around the block again and again and again. So I'm not worried about that. Mount Doji said, thanks for sharing, Steve. Looks like it hasn't crossed yet. Noting for the future, though. Yep, very good. Thank you very much, Steve. Mount Doji says, who else in here has Cisco? I still like it. Kamal has Cisco, Mount Doji, on the weekly. On the weekly, he bought with the close over the 200-week, close underneath, or possible rejection of the 50 or whatever his trade plan is. It doesn't have to be a rejection of the 50. Looks like it got to 48. That's the point I want to make here. Not every trade has to be a rejection of the 50 RSI, right? Like, it's fine to use it, but I like to vary it up. I might have one trade where I'm like, okay, I'm going to reject the 50 RSI. I may have another trade where I say, okay, I'm going to reject not the 50 RSI, but I'll look for the 50-day moving average. So it either closes below my stop or it rejects the 50 moving average. That's totally fine. It's a very good idea to vary up your trades, your time frames, and your profit targets, in my humble opinion. Oh, well, Apple. All right. Well, that makes it easy on Apple for sure. Really glad I hit that profit target up there, boy. I'll tell you what. All right. So it looks like Apple's coming off. Gold is holding. Goldman Sachs very likely coming off. Yeah, at least I'm getting a bargain on the SPY anyway, compared to where it was sold. And UAL, that one's coming off as well. Kamal says, I have Cisco. My plan is to close it below the 200 week. This week I have sold $40 calls against my position. Good. So he's got some covered calls there to help sell a little premium. Glenn says, we will get a shooting star on the daily S&P 500. Close below today's low tomorrow will be the confirmation. Glenn, what is your, from your chart study, if we do go down, what range are you looking at for kind of an ultimate destination to the downside if we break the lows? I was somewhere about 1800. I'm just wondering how that dovetails with your analysis. Oh, wow. NASDAQ went negative. Holy smokes. All right. I am going to start unloading here. All right. Apple is gone. Goldman's going to be close. All right, I will go with United Airlines then instead. Okay, United's gone. And Goldman Sachs, I'll just wait here and see where that closes. I like Goldman Sachs because we don't have a bearish reversal bar. Actually, the close is still above the open, so that's what's keeping me in the game of possibly keeping this. Ooh, Glenn's target's 1550. Okay. Little lower. Yep. I wouldn't be surprised. I would not be surprised. I know that 1800 mark lines up with some long-term trend lines to the downside, as long support on long-term charts, somewhere 16, 18. If we hit the 50% retrace on this up leg, my target would be 1600. Bing He, for SLV, if you ATR channel is using EMA, the closing price is now within 1 ATR. Okay, how are we doing? 2 minutes. So I'm still watching Goldman Sachs. All right, we've got 1 minute. I can't believe we gave back 900 points. Wow. Wow. Looks like we also have a rejection on Goldman Sachs of this previous high. It's going to be close. All right, 1 minute to go. Looks like the selling is accelerating to the downside. Yeah, that's not happening. Okay. Okay, Goldman Sachs is gone as well. So Apple's gone, Goldman Sachs is gone, UAL is gone. And my only position today is the SPY at 265.13. Crazy. Bought it right back where I bought it. Almost 265.13. All right. Boy, was that a nice overnight trade. Needed that one. All right, so we'll rinse and repeat and see what happens. But boy, everything is pretty bearish there. It looks like everything went negative. I mean, we did get kind of ahead of ourselves, but anyway, I'm grateful for a good day. I'm grateful for the Apple trade. I did take Apple off there. So we'll take Apple off. Apple is gone. Thank you, Apple. Goldman Sachs was a really good trade. We'll take Goldman off. And SPY with the new entry there, and United Airlines still up 1.92%, which I'm glad. But at least I can say I'm in the 18% club here. At least I felt a little left out, but really glad that I hit that profit target there at the very, very top. So anyway, really light at the moment. So all I have is gold with the 520 crossover. That is positive now here, at least the remaining half, and the SPY. So that's it. That's it. I didn't take any other positions, and we'll see if that was a good idea or not, but it made sense to me at the moment. All right. Listen, if you have any questions, comments, jokes, observations, information, please feel free to put it in the chat. Be glad to read it and talk about it. Before I do, just want to put in my quick little daily plug and just let everybody know that I do offer private one-on-one coaching and teaching lessons in the evening time via Skype. I love to teach. I've had great success with my clients. I do have a course, 5 sessions. Each session is somewhere between 2 and 3 hours. It's very intensive. It's just you and I. Which I think one-on-one when it comes to stock trading and being able to look at charts together, I think really is invaluable. But I teach you in that course everything I've learned over the last 24 years as a full-time trader, everything I've learned from all my teachers and mentors and coaches over the years, like Stephen Burns, Dr. Alexander Elder, Kerry Lavorne, Larry Williams, plus all the things, my observations and approaches that I use that I've developed over the years. Generally, the format of the class is the first half of the class, I'll teach you the lesson. The second half of the class, I ask you questions. I have you teach it back to me. We do a lot of chart study. I have you break down the chart. What's the pros? What's the cons? What's the entries? What's the exits? Are we phasing out here? Is this a volatility bar? A lot about trader psychology and creating a plan, creating an actual plan. And I basically use 5 different approaches, right? I have deep dip buys, I have return to value V1s, V2s, I have higher lows V1s, V2s, I have moving average crossovers, trend trades, and I have double bottoms with bullish divergences or bearish divergences. So those are all the things I teach. Now, if you're interested in taking the class, just reach out to me. My email is in the description of this video. You can also send me a message on Twitter. What I like to do is I like to have a Skype call with a potential student, and it's totally free. I promise you there's no obligation. I just want to see if we're a good fit. I just want to know more about you and your trading, your challenges, your goals. Then you can ask me any question as well. And, then, if we feel like it's a good fit, we can move forward and schedule a class. And if not, no problem whatsoever. And it was at least nice to put a face with a name, right? So you can send me email, you can reach out to me on Twitter. And then also, if you like today's podcast, if you found it helpful, I would really, really appreciate it if you could hit the thumbs up button. It does help build the channel. And let's Google know that there's valuable content, and that they'll kind of put it out there more. So that's all I ask. If you found it helpful, and if you didn't find it helpful and you didn't like it, then by all means hit the thumbs down button. So either way is fine. Either way is fine. Just be honest. All right. So that's that. So let's see. Anybody else have any other questions for me or observations, or anybody take any trades? get into any new trades today, we have any changes over on the board with the current positions we have with some of you, just let me know. Okay. Okay, so Bruce is off to hike. Have a good hike. Cloudy day in the desert. All right, have a good bike, Bruce. And it looks like Steven had a couple longs today. Stephen Burns. Steve did take IBB with the 530 crossover. So we'll watch that. Wish Steve luck. So that's Steve Burns. Steve Burns. All right, and Steve did also take the QQQs. And I would imagine he took it on the 520 crossover. Yes, he did. So at least he got a good price on it. Somewhere in that range. Okay. We got that there. Good. So Steve's down for IBB and also for the Q. So good luck with those trades, Steve. English people would get this one. The stupid panic buying is ridiculous. I just paid 15 pounds for OXO cubes. The stock market's gone crazy. Geez, Glenn, I don't get it. Sorry to say. Oh, English, like British people. Gotcha. What are OXO cubes? Is that like soap? OXO cubes. Oh, beef stock. 15 pounds. Wow. All right. All right. Well, listen, everybody. If we don't have anything else to talk about, then I guess we'll call it. But please remember, go out and do something nice for somebody today. Give somebody a call. Just check in with them. See how they're doing. See how they're holding up. Wish them well. I'm sure they'll appreciate you calling and know that somebody was thinking about them, right? It's in a wild and crazy time right now, and it's nice to know that people are thinking about you a little bit. So try to do that today. It'd probably make somebody's day. Glenn says OXO cubes is a stock ingredient in cooking. Gotcha. You know, if we look over on the S&P, well, let's not look on the S&P. Let's look at the actual SPX. And if we look at this, let's take a look here on the quarterly chart. If we can go way back here, see if we can get some contact points. Well, let's see here. All right, if we go way back in time, back here over to there, I don't really think, I think more like that, connecting this bottom and that bottom. I don't draw a lot of trend lines, but maybe that's where Glenn is coming up with his the $1,500 mark here on the Qs. So, you know, another way to look at, you know, I look at long-term trend lines or long-term moving averages kind of like trend lines in a way. So, you know, here around 1900, we might catch some support there on the 50 quarter. Here, the nice kind of confluence somewhere between 1500 and 1600 on the third ATR channel and the 100. So who knows? Yeah, you know, this might be the place that we go down. If we go down, of course, nobody knows, right? Let's keep an open mind both to the upside and to the downside. It doesn't have to keep going up. It doesn't have to go down. So let's be open to either situation. Bing He says, I hope I don't regret not taking the SLV trade. Well, we'll see. We'll know tomorrow. But, you know, if it goes up and you didn't take it, don't regret it, Bing He. You know, you made a decision based upon today, and it may work for you, may work against you, but you never know. Not taking it may put you in a position where you make more. You never know. Weird things happen. Weird things happen. Let's take a look at SLV after hours, see if we get any. Oh, it's up 5 cents. It's up 5 cents. Anyway, you had a good day on United, so fantastic being here. Bing He, glad to hear that. Zach, you're welcome, my friends. So Bing He and Zach and Glenn and Steve and Dr. Jorgensen and Mount Doji. Who else we got? We got Kamal, of course. Thank you, bud. Appreciate that. Frank, thank you, sir. Appreciate that. Did I get... Oh, we didn't have Joe today. That's who we're missing on the poem side. Felt like I was missing out. And Glenn, thank you. And Gamer, thank you. And Dan, thank you. And Bob and Quad Racer, thanks everybody for coming by. I really appreciate it. Hope you have a good rest of your day. If you don't mind, on the way out, if you haven't hit the thumbs up button, I would really appreciate that. But have a great rest of your day. Be safe. Give somebody a call. Check on them. They'll like it and they'll appreciate it. And hopefully we'll see you tomorrow during the last hour of the market. Take care now, everybody. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.